Hey traders, this is Ron Hayden, Market Tamer. Happy Wednesday. Hope you guys are having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll start off here with the diamonds. The DIA finished up 0.27%. The markets were basically flat to mixed. Not a whole lot of move here, but the diamonds are closing in on that 260 area, another 50 cents. We closed above their target, October 3rd all-time high at 265.70 on a closing basis. Now the IWM, it finally is joining the breakout party. It closed above the 200-day SMA. In fact, from December 26th, the day after Christmas, till now, there's only been 8 whole down days, and they're represented in red candles. You can see there wasn't much of a down move at all. Next target, all-time highs. How about the XLF, the banking ETF? It's sitting right on its 200-day moving average. Once it breaks above there, you have this little double top, ballpark around $27 or so, 27 and a quarter. Then we would go back up to the September high. The semis via SMH, their target's going to be up here. There's a lot of overhead chop here. This is what I call overhead supply. Once we had the sell-off and breakdown, everybody that tried to buy the dips in here are now saying, oh man, if I didn't sell when the breakdown happened, now that we're back up into that area, this is the overhead supply. These people may consider selling. So for SMH to truly break out, if I go to a 2-year chart, they need to get above, ballpark 111 on a closing basis back from March. That's when the SMH put its high in. That would then result in a technical breakout, all-time highs, and there's no more overhead supply to sort of put a limit on the rise right now. So if we cut through this pretty quickly, that's a bullish sign. We break out. Again, no more overhead supply. Sky is the limit at that stage, technically. Now, a couple other stocks to look at here is ticker symbol RARE. If I zoom out, there we go. Left shoulder, head, right shoulder. Neckline was 55. With earnings last night, stock put a high wave doji in today. That can result in indecision. And there clearly was, up and down, but we still finished higher by almost 7%. So here's what I'd be looking for. For confirmation, if I get a close higher tomorrow, that confirms this is a breakout move. Indecision followed by another up day is bullish, not bearish. If we get a sideways day or a down day a little bit, as long as we don't get outside of the range of that candle, it's still fine. All I want to see is a close above it. That constitutes bullish confirmation. The red line would be something I would consider as an end of day trailing stop, and that's the 20-day EMA. Another stock is CF. This is CF Industries. Nice little surge here. We've gotten through earnings, and if you look at earnings here, it's sort of a non-event little pullback, and now we have big pop. If we can close above 45 bucks, that is not much more. A gap fill up around 48, 49 will be the target, and then back up here to 52.50. So it needs to do a little more, but it is worth watching, in my opinion. Here's Kellogg's, not a stock we talk a whole lot about, but if you look back to the May low, then there was a December market sell-off low. Then there was a new low right back here in February this month. So if I zoom in, what I see here with this earnings is doji, dip, and reversal. So they sold, this earnings report occurred on February 7th, 8 a.m. They gapped it down. Then you have this reversal, bigger volume, and the bigger volume is just keeping and coming. This could have been a fake out, shakeout, sort of shake the lemmings from the tree. The fact that it's already over the 50-day is encouraging. If I want to be bullish on Kellogg's, I could already switch to a red line trailing stop, a 20-day EMA. If it closes above 60, then we would go to the peak here around 63.5, and frankly, then right to the 200-day. Above the 200-day, then there's a gap fill. So from a reversal standpoint, if I was looking to follow Kellogg's, here's the shakeout, the dip, bigger volume, closed higher on the day, and now we're starting to run. I'm going to revisit Walmart. I had a question because the stock had gapped down after yesterday's up move. All it did was fill the gap. So you might say, geez, it lost 2%, big volume. Yep, and it still held on to the 5-day EMA. All it did was fill the gap. I would still consider a 20-day EMA here as an end-of-day trailing stop. There's actually nothing wrong with that type of reversal yet. We break the 20-day, then the bullish momentum is over with on the daily charts. How about Take-Two and EA? These guys are down reportedly on China freezing video game approvals. But with Take-Two, it's already below the April support The target right now on Take Two is another $8, 10% lower. And then if you look at EA, this had a rebound on basically an earnings shakeout, fake out. It's rolling over. This one's harder to see for support because you have the 20-day, then the 50-day, and then back down here, and then back down here. So of the two, the one with the more directional bias, if you will, from a technical standpoint, is definitely Take Two. And then LUV Southwest read a report today that they had a whole bunch of planes off due to mechanical issues, and they issued some kind of company-wide alert trying to get mechanics back on the job. So it had a nice little earnings move here. It's now gapped lower. The next target's going to be the 50-day, which is pretty close to a gap fill. And then you would come all the way back down here, but it's lost its short-term bullish momentum. All right, that is it. Wish you guys a great rest of the week, and I'll see you in the next video.